Hi everyone, this is Catherine with the REI Bookkeepers, and today I'm going to be going over the two main reports that run your business, your balance sheet and your profit and loss. Here I have two examples of a profit and loss and a balance sheet, one that is not so good and one that's preferable and looks a lot better and cleaner. I'll go over each one of these individually as a report and go through some of the reasonings why one is bad and one is a lot better. There's a bunch of accounts here on the chart of accounts that I'll go over as well, so let's jump into it. So this first report I have here is the bad balance sheet sample. Going through some of these accounts, you'll show on your balance sheet your assets, your liabilities, and your equity. Assets in real estate being your checking account, a savings account, earnest money deposits, properties, notes receivable, things like that. Your liabilities being credit cards, notes payable, property loans, vehicle loans, if you have those. And then your equity being what you've invested into the business, what you've drawn out, and the income that the business has produced. So starting at the top with assets, we've got a checking account here. This is showing as negative $171,000 and change. Most of the time in real estate investing, the bank balances won't be looking like that, or really in any industry. So there's been a lot of entries on this business that haven't been entered correctly that are showing that checking balance as a negative number. Earnest money deposits is the second asset popping up here. Sometimes some investors will have this amount, this large amount, about $45,000 out in earnest money deposits. However, usually it's a lot lower than that, usually between $5,000 and $15,000 at a time. That's an account that will heavily track if you're doing a lot of deals and getting earnest money going in and out pretty frequently. Next up is your fixed assets. This will be a lot of the properties that you own if you're doing flips. If you have rentals, those will be here as well. For this, we like to categorize out the property, and we'll show that on the good example of a balance sheet. But here you see there are two properties, 10256 North Cranberry and 123 East Main Street. These large amounts, the 320 and the 400, are the original costs, the purchase costs. It could include interest, it could include rehab costs as well. It's not very clear on this balance sheet what goes to what, if there's different categories that are going into the flip. So to say holding costs like insurance and utilities versus rehab costs versus the original purchase costs. So those, we would rather have those a lot more broken out and have more transparency than what's showing here. Going into your liabilities, there'll be credit cards. Sometimes there'll be one, sometimes there'll be multiple. This is a pretty normal credit card balance, but just depends on your business. And that would get reconciled every single month just to make sure that that balance is correct. There aren't any double entries or any missing expenses. Loans. For this is a pretty large loan, but I think that it is encompassing both of these property loans. For Cranberry and Main Street, again, we would want this split up into two different loans so that we can see those itemized. You can also have notes payable to private investors and other institutions, and those will show up here as well. This vehicle loan is a negative number, so I would assume here that the asset for the vehicle isn't entered here, same with the loan. So the payments might be coming out of the business checking account, but they probably aren't being separated between principal and interest splits on the payments, and the loan isn't here, so the balance isn't getting paid down correctly. And then into the last part of your balance sheet is your equity. So opening balance equity should usually always be zero. This is This is generated from entering bank accounts that maybe have already had a previous balance before the bookkeeping has started, but that would always get cleared out after the bank accounts are created and getting reconciled. Owner's pay and personal expenses, this would be money that you've paid for personal expenses or money that you've drawn out. It will show as a negative number, but you would also have usually an equity account showing your allocation of profit, your contributions to the business, and neither one of those are showing here. And then maybe because this whole business looks like a mess, this net income is showing as a negative number of 115,000. We, of course, everybody would want that to be positive, so we would just need to make sure that the accounting is getting done correctly so that this reflects. So that's your balance sheet in a nutshell. I'll move over to the good balance sheet and kind of show you what we would like to see rather than something like that. So here is a good example of a balance sheet. Again, we've got the assets, the liabilities, and the equity. The first asset showing here is the checking account, $32,000 positive. That's a really good start. Earnest money deposits we've got out is $5,000. So we would keep an eye out to see if that 5,000 comes back in as a deposit, whether it's combined with an assignment fee or if it's just coming in by itself. We wouldn't want to put that on as income because it's just a return of funds to you. The properties we've got separated out pretty nicely here. We've got the original cost, purchase price of $335, holding costs. These usually include utilities and insurance. Interest will be hard money or private money, sometimes interest on credit cards. If you're just doing one flip or maybe two flips, we could split up the interest on the credit card that's charged. And then rehab costs broken out into labor and materials so that you can see how much you're spending out to contractors and how much you're spending out just on the materials for the property. Same thing shows with 123 East Main Street. The categories are split up really nicely so you can see how the property is going. As I mentioned on the other balance sheet, the vehicle wasn't entered, but it is entered here on the good balance sheet. This one, we just have a new truck purchased for $55,000 and we'll see the loan below. So then into our liabilities, we've got a credit card, $69,000. That's pretty high, but maybe they have a limit that high. Here is a notes payable to a private investor, Jerry. And then we've got both of our property loans separated out for each property, Cranberry Street of 310 and Main Street of 320. And then, as I mentioned, with that asset above, here is the corresponding vehicle loan of $43,605. I believe that payments have been made to this because the loan would have been a little bit higher depending on the down payment that they put down. And then into the equity, here is an owner investment. They put up $60,000 at the beginning, have drawn $16,325.14. And the income hasn't been allocated on here, but the net income pulling from the profit and loss is $72,000. You'll see your total equity, $115,000, and then your total liabilities and equity, $958,656, which will match your total assets you have as well. So that's your balance sheet. We'll move into the profit and loss. I'll show you the bad example first. So here is the profit and loss. On the profit and loss, you'll have your income and your expenses. Cost of goods sold is another form as well. And we'll kind of just go down the line and show you these as well. So for property sales, usually if we're dealing with fix and flippers, if the property sales is an odd looking number, then we'll probably know that the final settlement statements haven't been added in correctly or entered correctly. Usually people sell properties for really nice, clean, round numbers. So if the property sales is off, we might be inclined to check into that. Cost of goods sold, the way that we run cost of goods sold is everything associated with the property. So, and we'll break it out as well into categories that are informative to the investor. So there's some here, assignment fees would be what you paid out at the purchase of the property. And contractors, we would normally have that on as something as cost of rehab, cost of labor, that kind of thing. And our cost of goods sold would also include all the property insurance, property taxes, interest paid, utilities paid for the properties, and things like that. So all of that would be considered a cost of goods sold, which is not showing here on this one. And then we go down into some regular expenses, advertising, your automobile if you're paying for fuel or car repairs or things like that. Commissions and fees would also be a cost of goods sold if you're paying commissions out on the sale of a property. Same thing here, showing the insurance, the interest, and the labor costs. These would all be cost of goods sold for the properties. Legal and professional fees. I did set this up on purpose to show a bunch of sub-accounts popping up. There are times where we see profit and losses where they've broken things out so lengthy that it's really unnecessary. So there are multiple categories here to show you guys that when really this could all be legal and professional fees, and you can always run a report based on your vendors list and see who you're paying out. Same thing here, maintenance and repair. This is building repairs. Probably should be on as a cost of goods sold for the cost of rehab or the cost of labor. There also is a sort of duplicate account on here, mortgage and interest. If you have a mortgage account on here, hopefully it's mortgage insurance or something like that, but investors usually don't pay that. So usually everything would be in the interest cost of goods sold, and mortgage, if you are paying principal, will hit your loans on your balance sheet instead of your profit and loss. Then we'll go into some pretty standard expenses if you're paying for paper, office expenses, things like that. If you've got payroll, those would be broken out into wages, taxes, and things like that. Your rent and lease, if you're paying for an office or things like that, taxes and licenses, taxes to the IRS, any forms you need for your business or things like that. And then travel is pretty common as well. There are two on here I wanted to point out: uncategorized expense and miscellaneous expense. These aren't really ideal to have. You don't know what they are for. It's really hard to read this report and make a judgment call of what you're spending your money on if these categories are pretty vague. So that's a profit and loss that is not such a good example, and we'll jump into the good profit and loss. All right, so here is an example of a good profit and loss. On this one, I did make it seem as though 123 East Main Street was sold, and I'll show you guys how that was entered in with all of the cost of goods sold, along with another admin class, just keeping wholesale income separate as well as normal office expenses. So on this one, we do have our list of cost of goods sold for the property. So the property was sold for $575,000. Assignment fees that were paid at the purchase, $6,000. Commissions paid on the sale, $15,000. Hard money interest is $13,250. This property was originally bought for $397,000. During the holding period, insurance was $400, taxes $500, utilities $187.54, and then at the purchase, $3,000 was paid in closing costs, and you'll see down here as well, $1720.20 was paid on sale closing costs. So if you wanted to see that, decide which title companies aren't charging outrageous fees, that would be a good resource to look at. And then you've got your rehab costs separated between labor and materials. So all of those categorized as a cost of goods sold because you rehabbed the property, and then you've got your net income, $80,621.16. And then we've got this second column over here labeled as admin. You could do a wholesale class as well if you wanted to keep your advertising expenses and your wholesale income separated from even just regular office expenses. But here they're both combined. So wholesale income, 62,000. The advertising expense has been broken up into different categories if you wanted to see which advertising piece is performing better. So we've got cold calling, pay-per-click, texting, and so on. And those can be analyzed to see which is producing the most income. Then you've got your regular office expenses, automobile, bank charges, dues and subscriptions, education, meals, and so on. And that'll pop out as 9,500, 15, and 92 cents. All of these will collect on the most right-hand side in a total column and will show you your total net income for that month. So that's really what we would like to see with profit and losses, is keeping the properties each separate so you can see how the job performed, and then also keeping regular office expenses and all of that separate from the properties as well. So that is the examples of a good and bad profit and loss and balance sheet. If you guys have any questions, please let me know. Please reach out to us and we'll be more than happy to help. Thank you.